Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Wednesday, December 21st. A huge funding operation by the European Central Bank gave an initial boost to investor sentiment on Wall Street and overseas. But equities are now giving back those early gains and sinking into negative territory. Keep in mind, we're likely to see some increased volatility in the markets over the next couple weeks as trading volume thins out during the holiday season. U.S. stocks are also coming off a major rally that boosted the Dow Industrials by 337 points, their biggest one-day advance in nearly a month. The S&P 500 and NASDAQ Composite were also up by about 3% each. Those gains were prompted by a much better than expected reading of November housing starts and a surprising improvement in German business sentiment.
This morning, Europe is once again the center of attention following the announcement of a massive funding operation by the ECB. 523 Eurozone lenders accepted the central bank's offer of cheap 3-year loans. The ECB allocated 489 billion euros for the long-term repurchasing operation, much more than the roughly 300 billion expected by analysts. The move is an unprecedented effort to boost liquidity at a time when credit is becoming more scarce and expensive throughout the Eurozone. It's the first time the ECB has extended such loans for longer than a year, and banks will pay an interest rate of 1%. Some analysts suggest that the central bank is encouraging lenders to buy sovereign debt with the funds in an effort to reduce borrowing costs for struggling nations. The loans are expected to expand the ECB's balance sheet by about 20%.
Turning to corporate news, we have a couple big stock movers in the technology sector. One of the day's biggest winners is Research in Motion. The maker of the BlackBerry line of smartphones is surging more than 10%, following a report in the Wall Street Journal that Microsoft and Nokia have explored a possible bid for the company. Separately, Reuters reported that Research in Motion turned down a previous offer by Amazon.com, although the two companies may still be exploring commercial ties. Balancing out those gains in RIM is a big drop in shares of Oracle. The software giant is tumbling more than 12% after its earnings and revenue results both fell short of Wall Street expectations. Oracle's new software license sales rose just 2% from a year ago, and hardware sales fell by 14%. Both figures were well below earlier estimates.
Another big stock decliner in early trading is Walgreens, down 7%. Higher input costs were responsible for a 4.5% decline in the drugstore chain's fiscal first quarter profit. And Walgreens appears set to head into the new year without a new contract with its pharmacy benefits manager. Walgreens has been saying it would not be part of Express Scripts' network when their current deal expires at the end of the year. And finally, keep an eye on shares of Nike today. It's rising about 1% after topping forecasts with its fiscal second quarter profit and revenues. Nike saw improved sales in North America, China, and emerging markets during the period. However, higher product costs continue to hurt the company's margins. That's the latest from Weiss Research. Have a great trading day.